Hello, everyone. Welcome to another video. Welcome to yet another weekly analysis. This week, you know, we'll be talking about, you know, trend reversals. Trend reversals. I'll be sharing more light on trend reversals. We need to understand that, the market will not just continue to go in the same direction we desire it to go. You understand what I'm saying to you? The market will not continue to just keep falling because we want it to fall. You understand what I'm saying? Excuse me. So I need you to understand this. Like before the market will reverse, it will first of all give you a sign. It will tell you before it reverses. The market will give you a signal before it reverses. You will not. The market will never do this. Let me show you something. Yeah, the market will never do this. Right? Look. The market will never do this bounce and then start go to the outside. No, it won't make. It won't do this. It would do this. Come down. To tell you before it reverses. You see what I'm saying to you? It doesn't matter if it's a double bottom or a double top or head and shoulder. It will do this then before it will accumulate before it pushes. It will shift structure before it pushes, right? It wouldn't fall and then do this. So I need you to understand that fact. Moving into this analysis for the week. Now, for this week, if you notice last week analysis on USGJPY, we made if you go back and check the last video, look at the last video, you see in the last video this was where we were at last week, right? Last week we had done this lower low, lower high, lower low, and I think we were around here when we made the video for last week. And I said that we need the market to come down here and go up, or we could just easily wait for it to push up. Sorry. We need the market to come down into this level, and then we can buy up to the upside. You see what I'm saying to you? Now, this is an advanced level. You need to understand. Every time the market puts in a left shoulder, not every time, but most of the time when the market puts in a left shoulder, trying to form a head and shoulder to reverse, it will most likely come and fulfill a right shoulder. You know what I'm saying? Now, how do we predict, or rather, how do we know where the right shoulder is going to land in? How do we know where it's going to be at? Simply, you need confluences. The first thing we need, now you can see we didn't touch. Now I have a rule where I say if it doesn't touch my price, I don't get involved. You see what I'm saying to you? If it doesn't touch my price, I don't get involved. But then I saw something and I'm like, I brought out the Fibonacci retracement tool and I saw this and I was like, okay, it's at the 50 and the 60% moving. It's at the 50 and the 60% area of interest. And then not just that, it was also at a round psychological. Now it was at 142,000, I think. Yes. It was at 142,000. That was the round psychological we had plot. That's the round psychological I had coming into the week. You know, because we had round psychological. Now, if you look, we have two confluences, right? We have the round psychological and we have area of interest coming off of the Fibonacci. You see what I'm saying? We have area of interest what coming off of the Fibonacci. Now, if you look, this is how accurate it is. The Fibonacci retracement tool has got the market has gotten into the 127% area and it's rejected from it. That's how specific and that's how accurate this is. Now, moving forward into the 4 hour, this is just a rundown of last week. This is not for the future. I'm just trying to refresh our memory. Now you can see how perfect it was. It formed a double bottom. Now, if you remember what I said the market will always tell you before it reverses. It will not just go up and then now, for example, look at something like this here. It will not just go up and then reverse and start coming down like this. For example, this push to the downside, right? It will not just start coming down, boom, boom. No. It will first accumulate. That accumulation is a sign of reversal. You see what I'm saying to you? Now, if you look to the left, you can see double tops, right? Before it started to push down. If you look to the right right now, you will see head and shoulders before it started to push down. You see what I'm saying to you? If you look now at the bottom right, you see what a double bottom before it started to what push up. We need to be patient. The only way to be able to overcome the need to just push the buttons or rather push the buttons and execute trade is patience. The only way to be able to wait for these extra confirmations is patience. You see, listen, patience will pay a lot. You need to be patient. You need to wait. It is better for you to miss a trade while being patient than execute a trade because you think it's going to go in your direction. I say that again. It is what better for you to miss a trade because of your patience than to execute a trade because you think it's going to go your direction and then take a loss. I would rather wait and then miss the trade than execute and then lose the trade. You see what I'm saying to you? So moving forward, now I don't mean you should pass you should pass on unclear opportunities. You should not. Never pass on unclear opportunities. Always reward, execute. Always what execute. So moving forward, after this double bottom, or rather when I saw this double bottom forming up, I knew what I was expecting was already coming. Now we had a trend line, right? We had a what? We had a trend line, coming from that level, and we had a double bottom, but it wasn't ready for me to execute here because we hadn't broken past the trend line. So I went to the 1 hour to see if I could execute, if I could like put in a fixed execution. Now I enter my trade twice. What I do is this: my first entry is if for example the broker the prop firm I use, I cannot risk more than 1%, right? So I use I make sure the first entry is 1%. That the first entry is sorry, half a percentage. Now that half a percent is for me to test the waters to see if it is okay for me to what add to my winners. Now the first entry comes out after the breakout of the trend line. I take that again. The first entry is half a percent. It comes out after the what breakout of the trend line. Then the next entry comes out at the retest. Now the difference is this: is where my stop loss will be placed at. That's where the difference comes in. Now my first entry, my stop loss was around here. Then the next entry, my stop loss was the second entry after I found out okay, it has retested, and I went to the 1 hour and I saw a bullish engulfing, and then I executed. Or rather, I just waited for this 4 hours to give us a bullish engulfing, and then I executed. And then my stop losses were around here. You see what I'm saying to you? My stop losses came below here for the second entry. Now I've added to my risk. Sorry, added to my winning position. All still mitigating my risk, all still having the same risk of what half a percent. Isn't that just it? Of a percent rather. Isn't that easy? Isn't that more beautiful? Now you might be thinking you may have like a $100 account or a $1,000 account, and you are thinking that you need to make more money. You need to up your risk. No, my brother, you do not need to up your risk. You have to up your capital. That is the only way you'll be able to make money in the market. Upping your capital, increasing your capital is the only way to make money in the market. There is nothing like placing more trades to make more money. Increasing your capital makes you more money. So moving forward, for this week, I made money selling it down. Now, this was a systematic counter trend trade. The weekly was very bearish. The monthly was bullish, even though we are rejected from this level, and then the daily was still bullish. But this is an knowledge that a mentor teaches is that Willis he will teach you this. I sold it down, but I need you to understand when I sold it down, I risked half a percent. Exactly. When I sold it down, I didn't, put in all my risk. I risked what? I reduced my risk to half a percent. Why? Because it is not an A plus setup. It is a trade that okay, I can take, but I can take this trade, but with a very very low risk. So what did I do? I took just one position with half a percent, and I made what 1% off of it, 2 to 1. I got out, and then I waited for the next entry, and I made money off of this, and that 3 to 1 or so. You see what I'm saying to you? Rather, it's 2 to 1, sorry. And I made money off of it. And just in 1 week, I was able to, make money selling and make money going up. In 1 week, I'm able to come. In 1 week, I made 3%. You see what I'm saying to you? In just one pair. In what? Just one pair. All this just because I was able to wait, able to, follow, my trading plan, and I was able to, just concentrate on a certain amount of pairs. You don't have to trade the whole board. You don't have to trade the whole quote that you see. So moving forward, top down analysis for this week. Let's focus on the pairs for this week. We're still on USGJPY. You see, we're not scrambling for pairs. We're not on Euro AUD, USD CHF, Euro this one, Euro. You see what I'm saying to you? We are on a specific pair. That's how to get it done. Mastery of a specific pair. Mastery is how to get it done. So I'm not saying if you trade multiple pairs, you may not be able to make money. But the fact that when you trade a certain amount of pair, you'll be able to see the little things that the average person wouldn't see, like the sale that happened that a lot of people wouldn't notice. Moving forward, top down analysis USGJPY we are bullish. Higher high, higher low, higher high, higher low, higher high. We are still putting in a higher low. You understand what I'm saying to you? And I like the fact that we are rejecting it the way we rejected it in the past. This looks like it was a double bottom, but it is not yet a double bottom until we what break the neckline. This is the neckline. Until we break the neckline and close above it, it is not a double bottom. I'll show you an ideal double bottom on card JPY in a minute. So now we're expecting we're expecting a bullish run to the upside on USD or JPY. So now all we need is this. All we need is what is a break and retest. Easy, quick. It's easy. There's nothing, there's nothing complicated about anything. We are bullish. Lower low, lower low, higher high, higher low, higher high. We need a higher low to be put in, but we need the retest on the 4 hour. Now we've had the retest, right? But I cannot execute because there's no structure for me to put in a trend line. So what I need is this. I need the 1 hour to retest into this level back. Then I can put in my trend line. And you understand what I'm saying to you right now? Then I can put in my trend line and wait for the trend line to be broken like so, and then right above this last support right here, and then I can execute. And my stop losses can come below right here, and then that will be the first entry. That will be what the first entry would 0.5% or whatever risk you wish to use. Then I would wait for what a retest of the trend line for me to now then add to the risk, because it is not yet a winning trade until I see the retest of the trend line and the bullish engulfing to push to the upside. Then I can say, okay, yes, this is indeed what a winning trade. And what would this look like? This would then look like a head and shoulders. Isn't this beautiful? This would then look like a head and shoulder. This would be like a left shoulder, a right shoulder, and then push. You see what I'm saying to you? But anyway, this is the plan for Euro USD JPY, and in this case, we have to sit on our hands. If I don't see this, if we do not see this plan as we've planned it, nothing, we're not going to move a muscle. We need these things to happen. Then we can move a muscle. For now, there's nothing to do. There's nothing to do. So on card JPY, now on card JPY, we were expecting the market to fall. I need you to understand something. You do not tell the market what to do. You do not tell the market what to do. You let the market tell you what it wants to do. On card JPY, we're bullish, right? We're bullish. Because why the monthly time frame is giving us a head and shoulder. But we've come into a very, very crucial area, or rather a crucial price in the market where we could easily reverse. We could easily reverse. Because you can see I've had my lines, excuse me, I had my lines drawn out expecting to sell. But what do I have to do? I have to adapt to the market. I have to be realistic with the market. You see what I'm saying to you? So now, this is a confirmed double bottom because we've broken the neckline. You can see a sharp close above the neckline. Not just a sharp close rather. Lower low, lower high, lower low, a higher high. So the weekly is very much bullish and the daily is very much bullish, rejecting from a very, very important area of interest on the weekly time frame. And you can look to the past where we've had a double bottom from this same level with a break to the upside, and then we rallied all the way to the upside. So the exact same thing we're going to do, rinse and repeat, rinse and repeat. So on the card JPY, we need the market to break on the 4 hour to retest, and then we can push to the upside. Patience is all this is going to take. Patience, nothing more, nothing less. We just have to wait. So these are the pairs for the week, nothing more. These are the pairs, easy, just two pairs. That's all you need. You don't need more. You don't need more. You just need a few. You see what I'm saying? You just need two pairs that you can watch and understand, and then because it's important for you to know what happened last year in a certain pair. It's something to you. It's important for you to be able to remember what happened last 2 years in a certain pair. I can tell you what happened last year on CAD because I was trading CAD last year, last 2 years. You see what I'm saying to you? That I can tell you the losses I can go back to the chart and show you the losses I took on CAD last 2 years ago. You see what I'm saying to you? Because I'm used to these pairs. I have followed these pairs. You see what I'm saying to you? So on CAD right now, we need the 4 hour to give us a break and a retest. We need to be above. And you understand what I'm saying to you? We need to bounce above. You cannot trade it below. We need to be above the area of interest. Because every time we are below, we sell. Below, you see below sell, below sell. So we are below right now. We could easily sell. So we need to be above. We need to be above. So we wait for a fresh break and then a retest, and then we can take it to the upside. That's all that there is. It is important for you to make a plan. When you've planned the trade, then you can trade the plan. Now we have an idea of what to expect, because you need to understand that we are just predicting the market. We do not even really we don't see the future. Example, we just predict the market of what might happen. Not if you notice, I didn't say will happen. I said what might happen. We predict the market of what might happen. So if you keep expecting the market to go where you want it to go, it's going to disappoint you. Trust me, it's going to disappoint you. So we plan, we make a plan, we journal our plans. You have to write your plans down. So after the week, you go back and say, okay, did I execute my plan or not? Then you have something to work on. We have to grow. You see what I'm saying to you? We have to grow. Trading, you have to grow. So I urge you lot to focus on your trading plan. Focus on your trading plan is important. Focus on your trading plan. If you haven't planned it, don't trade it. I'm telling you. You know why? Because there are sometimes when you come into the market on a fresh week and then you start seeing some things in the market that you didn't plan for, and it's looking good. You see what I'm saying to you? It's looking like, okay, if I execute this market right now, it might give me profit. No, you see what I'm saying to you? You're being manipulated by your own emotions. You're being manipulated by the fear of missing out. Your plan is a premeditated action. It's there to help you. It's there to stop you. You see what I'm saying to you? If you don't plan, you plan to fail. So plan your trades. Have a plan. If two trades a week, I have a plan where I do not execute more than two trades in a week. I am a swing trader, not a day trader. But I cannot. I might take a trade for the beginning of the week. I might take a trade and I hit my stop loss. Then I take another trade and hit my stop loss. Do you think I'm going to execute another trade? No. Now I have to recombobulate. I have to relax. I have to restructure for the next week. It is a plan. It is not stopping me from making more profit. I'm telling you, it stops you from taking more losses. I know what I'm saying to you. Your plans do not stop you from making more profit. They stop you from taking more losses. So don't see them as obstruction. No, your plans are not obstructions. They are disciplined plans. You see what I'm saying to you? So make a plan around yourself. If you come into the market expecting to just trade anything, the market will give you anything. But if you come into the market expecting to trade a particular thing, trust me, if you don't find that particular thing, you're not going to execute. Trust me, you are bound to succeed. You know what I'm saying to you right now? So execute your plans, make plans, write your plans down, formulate a plan into your trading, and you see it also shape your life. I'm telling you, you see it also shape your life. You know want to do things, go meet people, or be involved in certain things if you've not planned for it. I'm telling you to execute your plans, right? Pray that the Lord helps us to execute our plan, because it is more of spirituality and less of physicality. So you can't do it yourself. It's quite impossible to kill patience without the Lord. It's quite impossible to kill FOMO without the Lord. So let us go to the Lord to help us in our endeavors. So like, subscribe, leave a comment, share, do whatever you like to do. So I hope you all have a blessed weekend. Enjoy yourselves, but most importantly, study the market. The weekend, I don't know, traders, some traders see the weekend as a break. I see the weekend as a time where I need to even go back to the charts. I need to look at the things I have missed. I need to double down on the market rather than going out or seeing friends or whatnot. So I urge you lot to double down right now. This is the time to work. This is the time to put in work. It's not at the end of the year. From the beginning of the year, right now, we're the second quarter. You see what I'm saying to you? So this is the time to put in that work, to lock in. Forget what everybody's saying. Trust me, it will pay out. I know I'm saying, you know why it will pay out? Because there are other people who we watch online who are telling us the same thing that we are doing, and it paid out for them. So you think it's not going to pay out? If you follow the line of a fool, you're going to be a fool. If you follow the path of an idiot, you're going to be an idiot. But you follow the path of a millionaire and you follow the disciplines he's telling you, what do you think you're going to be? You think you're going to be an arm robber? No, you're going to be a millionaire yourself. That's what I'm saying to you. So keep on pushing, keep on going. We'll all grow together. I need to grow too. That's what I'm saying. I'm on my path of growth and I see my growth. That's what I'm saying to you. It works. Keep on pushing, yeah? Have a great weekend. See you. Ciao, ciao.